So we're here with Alan Connor, who's the commercial director of Exchequer Software Ireland, and we're here to talk about financial software, particularly scalable solutions, and what happens when certain things happen to your business. Alan, supposing in the current climate, there you need to downsize your business. In other words, you need to let staff go, or your just business isn't doing much money. Realistically, um, what can your financial software do for you there?
I guess there's two parts to that question. The first is identifying exactly what needs to be scaled. If you don't have the right financial systems and the management information at the starting point, how do you know where to cut corners, to downsize, to create better efficiencies? Is it in your stock holding? Is it in your budgets, your targets, the productivity, the customer service end? If you have a modern mid-range or ERP solution, that will equip you to make those right decisions in the first place. Scalability then in the software comes to automating far more. Sometimes that may come with an investment, but to automate more around the day-to-day productivity of an organization. If you can lower your overheads, increase efficiencies, increase automation, then obviously you're leading towards being a more efficient organization. Certainly some of the older top-tier solutions, the DOS solutions, the older generation would have a very high annual fee. And that was very common back then. During the Celtic Tiger, that was acceptable. These days it's not. So absolutely you should be able to reduce some modules, reduce some user counts, and at least for the interim whilst your business tries to survive, to succeed through what we're currently facing, your partner will be able to work with you to reduce the costs and provide the business expertise to help your system do more for less.
So if you have to downsize your company and you have paid for a certain scale of financial software package, are you stuck with that, or can you downsize, or what are your options there?
I think it comes down to fairness and understanding in the industry itself. On the one hand, you have the absolute software licenses, returning software, returning a part of a module, just was never considered in the early days. Even in the first Microsoft or IBM licensing, it was never built in. However, what we as Exchequer are doing and our partners, we're listening to customers and we're trying to help.
So what does that mean?
That means we're willing to negotiate. We're looking at our clients, particularly long-term clients who've been with us, who've grown, who maybe did expand their software during a Celtic Tiger, and now they need us to help them. So
okay, but that's on a case-by-case basis, not actually built into the license model from the beginning.
No, it is somewhat unusual in software and business software licensing. Those applications out there that might have an annual dongle or an annual timeout, you're very much tied into a fixed fee, or else you lose your entire software. With the more modern applications, you have more flexibility. But genuinely, it is down to a case-by-case basis. The level of support that might be required. A client with us, for example, as a customer for 10 years, is pretty much an expert in the software. They don't need the level of support service they had in the early days. So justifiably, almost like a no-claims bonus, we are willing and able to talk with our clients to help them through.
For somebody starting out, particularly somebody who might have been laid off, wants to start their own business, what is getting accounts software, financial packages, is that a must-do for them, or are there regulatory or legal reasons they should have it, or no, or not?
Historically, it was probably the afterthought. Eventually, when the shoebox got full of receipts and you realize you're paying your bookkeeper too much. These days, for any startups or management buyouts within organizations or mergers, there's undoubtedly some finance or bankers involved. They need the strict controls from day one. If you can't provide your bank, your financier, your partners with a clear business plan, with the knowledge and the security of systems to back that up, you won't get off the first starting block with your new organization.
What are you saying, that if you're looking for finance, that you've a better case if you are with an acknowledged software firm, or?
It's not so much the product itself, it wouldn't matter on the brand, but the ability to deliver. Anybody can write a business plan, but if you don't have the wherewithal, if you don't have the systems to back up the ability to deliver on that plan and to account for that, then you'll find it much harder to get finance, particularly from the banks these days. Hopefully it'll change. If you look at ISME stats, and despite what the government are advising us in relations to finance available. On the ground, on the coalface, it's not happening. Established businesses that we're finding who need to grow, need to invest again to expand, aren't able to receive finance. So there's very little chance of the startups achieving the same. However, the cost of initial entry-level software has been decimated. There's online providers for 20, 50 euro a month that you can get a nice starting block. Lots of our smaller competition out there have very good products at the entry level.
They're cloud services, are they?
Some would be cloud service, some could be as simple as Big Red Book
Okay.
at a simple purchase level. You buy it off the shelf in PC World or somewhere like that, and it's 100, 200 euro and you're up and running. Obviously, as your business grows, you will then upgrade to a mid-range solution, which is a long-term keeper. But to start the ball rolling, it is good business sense. You can't rely on money in the bank anymore. You have to control credit. You have to be able to look at your costs, your customer deliverables, and you do need some form of system to help provide that as well.
In terms of what you're seeing, in terms of your customers, in terms of the market, is the market rebounding? Are you seeing any pickup in business this year, or how's it going?
Last year was a very strange year, and the dichotomy almost was we had, throughout our channel, north and south, we've dealers across Ireland, and they identified far more businesses looking. The pipelines have been growing, and I know that from some of our competition as well. So we do have endemic confidence in many organisations. They expect the corner to turn. They expect to be given back the budget by the owners, by the board, to go and put in the investment for software. So companies are still looking. However, the decisions have been delayed. Certainly some of that has been affected by finance, but even here we are now towards the end of January, and in the first couple of weeks of this year, we've had our best January yet in the last decade, full stop.
Why is that?
I don't genuinely know. Our clients can't really identify it. Historically, because it's financial year end, December or quarter four used to be a very busy end. People would make deals there and then. However, some of that now has come into January. Whether it's revised confidence, whether it's ERSRI saying that we are growing by 5%, we don't really know. It is more a feeling of returning confidence. Potentially credit control issues in organisations in 2009 have been rectified. They now have agreements with their clients and they can see a proper cash flow. They can plan to spend rather than holding onto the resources just in case a customer defaults or your customer's customer defaults. There certainly is confidence there, and I do believe 2010 will see the return to that being backed up by spending.